What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I try to pull off 3 to 4 videos a week, but I tell you what, that Browns game was painful to watch. But what's not painful are 5 consumer staple stocks that have significant dividend increases and are very popular dividend stocks that'll never let you down. So let's check these out right now. And that first stock is Coca Cola. It's sitting at $54.12 with a dividend yield of 3.10%. The market cap is $233.62 billion. Its year range is 47.30 to 57.56. The dip is there. So this one is in my M1 Finance dividend portfolio. They have a ton of products. I absolutely love their Coke products. I also like their Fairlife milkshake that they have, or protein, Fairlife protein. And I actually did a review on that before I really knew what my niche was doing. I absolutely love that product. It has like 42, I think 42 grams of protein in some of them. Some of them are 26. Really tasty. And definitely when I'm in bulking season, sometimes I buy those products. So they have a ton of stuff that's out there. And they have significant dividend increases, which I'll show you. So over time, they have increased their dividend 30 cents, 33, 35, 37, 39, 41. They're at 42 cents right now with a PE ratio of 28.94, dividend yield of 3.13%, annual dividend of $1.68. How do you say no to this dividend stock? This one is a Warren Buffett stock. This one has significant dividend increases. It's not jumping up too fast. And, they have been around for so long. And, there's always potential stock split history. Again, I'm not a financial advisor. This is not for financial advice. It's for entertainment purposes only. And I have a disclaimer in the description. But these guys have significantly increased their dividend. They have a history of a stock split. And they are a beautiful stock to have in your dividend portfolio. And it's sitting at it's sitting at 3.13%. So how do you say no to that? Let's jump to the next dividend stock. And that next stock is Target. It's sitting at 228.90. It has a dividend yield of 1.57%. Its year range is 150.80 to 267.06. This is a beautiful traditional IRA, Roth IRA, and dividend stock to buy. Many people love this stock. And if you're a guy, don't ever mention the T word to your girlfriend or your wife. You're going to get sucked into going at Target, and you know it. You're going to be in big trouble. So don't ever say the T word. So it's just, that gets you in a lot of trouble. You're going to be sucked into it. You're going to be going shopping. So don't ever say the T word. Even with the stock, if your wife or girlfriend asks you what stocks you buy, don't say the T word. I'm telling you, it'll get you in trouble. And I'm going to show you its dividend history real quick. And this is what's really good about the stock. It has increased its dividend over time. Each year it increases its dividend. Look at this huge increase from 68 cents to 90 cents. I mean, this is a traditional IRA material, Roth IRA material, and this is just a beautiful dividend stock to buy, and it increases its price per share, increases its dividend. Everybody's always busy at Target. Target's always busy. It's not going anywhere. Let's jump to the next dividend stock. And that next stock is McDonald's. It has a 2.23% dividend yield. They're always busy. Everybody's always in line. It's right now $247.70. This is a dividend stock that is very popular amongst dividend investors. This is also a Roth IRA or traditional IRA material because look, it increases its price per share. At one point, it looks like it's right now beating the S&P. Took a huge nosedive. So kudos to you guys if you bought the dip. And it's an excellent day trading stock. Same with Target. So just keep an eye on those stocks. Those are beautiful dividend stocks. And McDonald's dividend history is awesome. I have to jump to that. But the thing is about Target and McDonald's is people are always busy. Lines are always busy. In the morning, people get McDonald's coffee. They get, Egg McMuffin and all that. They're always busy. So that's one thing to take into consideration. And then Target, they have excellent products. And again, don't say the T word to your wife or girlfriend. You're going to get in a lot of trouble. And I'm going to jump to the dividend history. Now, this is what's amazing about McDonald's. They have significantly increased their dividend. Eventually, they're going to be at $2. And that's what's really exciting about these guys. Again, this is not financial advice, for entertainment purposes only. Disclaimer in the description. I'm going to emphasize that one more time. But the PE ratio is 26.95. Its dividend yield is 2.09%. according to NASDAQ. Its annual dividend is 552. So it's increasing its price per share. It's increasing its dividend. What a attractive dividend stock. I mean, how do you say no to that? Them, Target, and Coca Cola, beautiful dividend stocks. Let's jump to the next one. I mean, you can attack this store all you want with jokes and stuff, but I absolutely love Walmart. Not just as a potential dividend stock to buy for my traditional Roth IRA, but they have significant dividend increases. They have a PE ratio of 39.36. Their year range is 126 to 153. They've been right in line with the S&P, and they're always busy. And I tell you what, and1 shorts are cheap, and I go there all the time to buy them. I buy flashcards. I have a Walmart cashback card, and I can't say no to that. They you just get in and out. It's always busy. Them and Target, they're always busy. That's what I like about these guys. And I'm going to jump to their dividend history. Look at these increases, 47 cents, 48, all the way at 55. It has a dividend yield of 1.6%, a PE ratio of 39.34, an annual dividend of $2.20. So they are increasing their dividend. They are increasing their price per share, and absolutely love this one. And this is one that I'm highly considering having on my traditional Roth IRA. These guys are really good. Them, Target, McDonald's. I mean, how do you say no to that? So, I looked at Vanguard VOO and all these, but these guys are just right up there. So, this is one thing. And remember, with an ETF, you have an expense ratio. Even though Vanguard's is very cheap, these guys increase their price per share. Some of these guys have an extensive stock split history. So this is what makes Walmart and Target and McDonald's very attractive, and even Coca Cola. Coca Cola I like is a really good dividend stock, but I'm going to show you its rival, and I'm going to compare it to its rival real quick, which is Pepsi right now. So if I had $10,000, let's just say $50,000, and you said either buy Coke or Pepsi, I'm going to buy Pepsi, and I like them better as a stock because they have significant dividend increases. They have way more products, and I'll compare these guys real quick, but they have a 2.76% dividend yield. Their year range is 128.32 to 159.63. They're not jumping up as fast, and they were in line with the S&P just about, but now the momentum has shifted, and I always like to say the gator chomp, with the tide has changed. I mean, they're not going anywhere. They're going to increase their dividends. They're cheap. Well, I wouldn't say cheap, but they're right at a range where they're not jumping up too fast, and you can't keep up with them like price per share. They appear not to blow up too fast. And I'm going to compare them to Coca Cola real quick. So here's the thing about these two. Coca Cola is cheaper, and in the long run, I do plan on having both of these in my dividend portfolio. But Pepsi, if you look at traditional Roth IRA material, I think Pepsi's a better one than Coca-Cola. But, the dividends, they have a 2.76% dividend yield. I think in the long run, Pepsi's a better dividend stock. I do like Coke products better than Pepsi, but traditional Roth IRA material and overall price per share increase, I like Pepsi better. But they're both really good dividend stocks. I mean, look at the increase in the past 5 years, 46.05% to 29.88%. And the CDP climate change score is A, not bad. But what I really like about Pepsi is their dividend history. $1.07. So they're in the dollar range. They have significantly increased their dividend pretty fast and pretty big. And they ain't playing around. Look at this. 75 cents, 80 cents, 92 cents. They're in the dollar mark right now. They have significantly increased their dividend over time. They're not jumping up too fast either. So this makes them a very powerful dividend stock. They're sitting at 156.03. Out of all 5 of them, I think this is probably the best dividend stock out there with affordability and dividend increases. So I want to see what you guys think. If you had $50,000, would you throw it in Pepsi or would you throw it in Coca-Cola? That's my big question. And traditional or Roth IRA material, who's better, Pepsi or Coca-Cola? That's what I have for you guys. Let me know what you think of this video. If you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And I'm going to try to post a quick one tomorrow. I know I'm very busy with school, but I wanted to post this one for you guys. It's really crossed my mind. I wanted to express my thoughts on, you know, some 5 really good consumer staple stocks that are out there right now. So, do you own any of these? Let me know what you guys think. You guys take care and have a good one.